quite a challenging time to take over the helm. Give us a sense of how much clarity there is for the group in the first quarter, bearing in mind that lockdown that India is undergoing.
Haslinda, good morning. First, it's a pleasure to be here with you today. And it is a challenging time, but in terms of where we are today, we are far better than what we had expected about a month ago. The COVID cases in India are coming down rapidly. We're seeing far more uptick in economic activity, and much easier because we planned this transition about 18 months ago. And that has enabled me to get in the role, in a sense, last year and then really take off from that this year.
Against the backdrop of the pandemic, there's also concerns about supply chain disruptions, that chip shortage. I mean, amongst all your businesses, the auto industry, I mean, how are you navigating that?
So the auto industry has been hit the worst amongst all our businesses right now. The chip shortages have been in multiple areas, but we have most of them taken care of now, except for two areas that we are still focusing on. The supply chain disruptions in India were as a result of some local lockdowns and in some cases plants not being able to operate at full capacity. But the government has been very good through this last few months in terms of helping the frontline workers operate, and that's made it a lot easier for us. So on balance, we have been at a lower production level, but we're starting to see sales picking up now. And in a sense, we are much better today than we were in the lockdown in April and May last year.
Realistically, though, Anish, when do you see car sales, for instance, getting back to pre-pandemic levels?
We see that happening in about a year, which is fiscal 2023, starting April next year. It may go faster because we are starting to see a huge flurry of activity over the last week, but we'll have to wait and see whether that really takes off. But if we go back to 2019 levels, I think that would likely be starting April next year.
Anish, I want to get a sense of, you've been in the job just over 2 months there as chief executive of Mahindra & Mahindra. You've been working there for many years as well. How are you going to change this group, if at all? Is it going to be steady as she goes? What do you see as being the mainstay of Mahindra, and what do you see as perhaps some of the lagging parts, and what do you do about all that?
The first part is to maintain our legacy with regard to environment, with regard to social activities and governance. That's been a key part of the Mahindra Group. So what we call is continuity in change, and that part stays constant for us. The second is really go back to value creation. The Mahindra Group has been very strong in value creation over many years. I've talked about that in the past. Over the last few years, there were a few investments that didn't work well, and we had to do a fair bit of cleanup last year and take a lot of difficult actions. We've done that. That was a positive for me, where before starting the role, a lot of the difficult tasks have already been done. And moving forward, it's really looking at growth and how we can create that value for investors.
Well, exactly. And so where, I mean, you're a conglomerate, there must be, parts of the business that you're worried about and you need to address and pay more attention to than others. And what are those?
So, Rishaad, the worry for us was our international subsidiaries. And over the last year, we have exited many of them. We have restructured some of them. And as a result, we see our losses from international subsidiaries having come down very substantially. And we will be close to break even by next year on that front, as well as our investment spend there has come down very significantly as well. So that is really behind us. The focus for us now is working through all our businesses from a growth standpoint. And there are three key levers we have. One is our core businesses, which is auto, farm, Tech Mahindra, and Mahindra Finance. The second is what we call our growth gems. These are market cap in the next 3 to 5 years. And the third is digital platforms. And it's now really about working with them and driving growth.
Anish, you're increasingly looking at EVs and you're planning an investment of more than $400 million. Do you think that is enough to take on the likes of Tesla, which is increasingly looking at the India market?
India is a few years behind the rest of the world in EV for a variety of reasons. And this is, in a sense, an initial investment, but a lot of what we will do will be through partnerships. So it will depend on the kind of partnerships we set up, and that will define the investment we need going forward.
So what kind of pipeline are we looking at for your EV business?
We have 6 products that we're going to launch in the next few years, but these are essentially taking current platforms and modifying them for electric. We are looking at a born electric platform, and this is a project that will take about 3 to 5 years to launch.
Anish, what's the outlook for new orders? I'm just looking at Tech Mahindra here as well, because we've got a lot of money being spent, capex, if you will, around the world on tech. The thing is, how does that actually help you? And how much are you exposed to 5G, and what's your outlook, basically?
Tech Mahindra has been a leader in telecom for many years, and is leading the wave on 5G as well. So extremely well positioned in the current environment. You're absolutely right. We're seeing a lot more spend around the world. And what we've seen, therefore, is Tech Mahindra's performed exceedingly well, even through the pandemic. And we see very bright prospects for the company going forward.
Absolutely. But looking at this, you've also got the likes of, I can't probably pronounce this company. I mean, where are you at the moment with SsangYong, that Korean company there? And, what's your plans with that subsidiary?
SsangYong was one of the difficult calls we had to make last year from a capital allocation standpoint. It was one that we did not want to make, but we had to. And where we are right now is the company is in court receivership, and there are a few buyers working with the court on that. So it will follow that process, and we're hopeful that the company comes back on its feet with a new buyer going forward.